Hello everybody, I am CA Aastha Gupta. Today I will be in conversation with CA Pramod Jain ji on accounting for non-corporates. By non-corporates I mean partnership firms, proprietorships and LLPs. Basically वो entities जो companies के अलावा हैं. So without any further ado, let's begin.
Namaste to all. Thank you Aastha for choosing such an important topic because it is applicable to a lot of entities
True.
throughout the country.
So my first question is, how many types of accounting standards are applicable in India?
Thank you Aastha. It's a very good question because if an accounting has to be done of any entity, whether corporate or non-corporate, it has to comply with the accounting standards.
Right.
So for companies, the accounting standards are different. If I talk about that is notified by the Ministry of Corporate Affairs. For certain companies, which are the listed companies and companies whose net worth is more than 250 crores or their holding subsidiary, the converged IFRS, that is Ind AS, is applicable. For all other companies, the company's accounting standard rules 20221 is applicable.
Right.
And for all other entities, which may be more than 50 lakh, to them the accounting standard issued by ICAI, the Institute of Chartered Accountants of India, those are applicable.
Okay. So are accounting standards mandatory for non-corporates? Who is the regulator for such applicability?
Actually, if I talk about, in India, the accounting standards came when the Institute of Chartered Accountants of India made the accounting standards mandatory on its members.
Okay.
On its members. So if I talk about other the companies, the accounting standards are mandatory on everyone, and if they are being audited, in that case the auditor has to ensure that the accounting standards are complied with. The
Right.
basic purpose, Aastha, is that the financial statements should reflect a true and fair view.
Exactly.
And for standardization, it is required that the financial statements are complying with accounting standards. And if they are not, then when the auditor is reporting that the financial statements are true and fair, and if they are not complying with accounting standards, then they are not true and fair. Hence, those are mandatory on the auditors to ensure that when they do an audit, even it is a tax audit, then they have to ensure that the financial statements are complying with accounting standards, whether it is proprietorship, partnership, limited liability partnership, society, trust, whatever it may be.
True. True. So I think this is a very important point. There is a lot of confusion amongst us whether it's only applicable on companies or other than companies also. So very well covered. Do I have to disclose all accounting policies for the non-corporates?
Another very important question, Aastha. Here, if you talk about any, again, non-corporate, as you said, proprietorship, partnership, LLP, society, trust, so their financial statements should have notes to accounts.
Right.
And in that, there is a requirement as per my accounting standard 1 that all significant accounting policies should be mentioned. That is, those accounting standards which are applicable to that entity and which are significant, maybe related to revenue, my PPE, we say property, plant and equipment, not
Right.
fixed assets,
Right.
and so many. So whatever are applicable, all those have to be given at one place in the notes to accounts, so that it is understood that how the financial statements are prepared and what are the basics about that.
So I think depending upon the type of business or type of
Yes.
service line the
Yes.
client is in, you
Yes.
have to. Okay, great. So do I have to disclose the classification and basis of valuation of inventories for proprietorship, partnership, LLPs?
Yes, a very important question. What we have actually, sometimes we have seen that in proprietorship partnerships, we in the balance sheets, financial statements, we just mentioned some of the preparers mentioned that inventories, closing stock, and total amount.
Yeah, it's very common.
But actually, it has to classify the inventories. Classify, like in case it is into manufacturing, then raw material, finished goods, WIP, and in case it is trading, then stock in trade. So that is required as per our accounting standard 2, as well as under income tax, my income computation and disclosure standard ICDS 2.
ICDs.
So that is mandatory to disclose in the financial statement the classification and their values.
So the breakup has to be there.
Yeah.
Right. Many professionals are accounting on cash basis, but few are doing on accrual basis only. So those accounting on accrual basis, do we have to take care of something extra or?
So this is very important
Right.
question, because it is not about professionals, it is about any service industry.
Okay.
For example, let me take a case of say an advocate. So if they are following cash basis, whatever they received, whatever they pay. So they will be accounting on that basis, whether it is advocate, chartered accountant, company secretary, or any service provider. Now, if they are going for accrual basis, then their income and the cost should matching concept. So if it is accrual basis, then they have to recognize for my unbilled revenue. Unbilled revenue means the percentage of completion method. If I talk about the percentage of completion method I have to use that how much percentage in a particular service line which I have rendered, to that extent the revenue has to be booked. For example, suppose I am doing an internal audit, and my work is started during the year, but my work is completed in say month of May or June next year. So the percentage I have completed up to 31st March, I have to book the unbilled revenue. Same is the case for litigation. I have taken a case with the High Court or any other court or income tax appellate tribunal. So how much hearing, कितनी hearing हुई है, कितना काम हुआ, मैंने एक सर्विसेज आई एम गिविंग, तो कितना काम मार्च तक हुआ, उतने तक का इनबिल्ड रेवेन्यू बुक करना मैंडेटरी है टू इंश्योर व्हेन यू आर सेइंग आई एम फॉलोइंग अक्रूवल बेसिस ऑफ अकाउंटिंग.
राइट. So basically, in instances wherein the work goes beyond the end of financial year, उसमें मेरे को unbilled revenue book करना जरूरी हो जाता है, especially in service industry.
हाँ, as per percentage of completion method.
Right. Okay, next question. So this is like a case study based. I have 3 branches in 3 different states, and they sell goods to each other, charging GST as per law. So I'm talking about stock transfer basically. Should I account for all GST inter-branch purchases and sales so that it reconciles with GST department records? Because वहाँ पे तो मैं report करती हूँ ना as turnover, stock transfer also.
Very good question, Aastha. And this question has cropped up after GST.
Of course.
And in fact, if I talk about, because the question has come because we are issuing an invoice.
Right.
But actually, if I talk about as my accounting policies or general accounting practices, you cannot make a sale to yourself. So that is basically a way of transferring the goods.
Correct.
So I cannot account for total sales made to each branch just for the purpose of reconciling it with my GST department or income tax department. So we have to net it off.
Correct.
We have to net it off. I cannot recognize. Otherwise, what will happen? I have got 4 branches in my 4 different states, and I just make a sales. So it is a roundabout sales. My sales and purchase both would be inflated. So it is not a correct policy.
Okay.
It should not be done. If any preparer is doing it, auditor should be very, very appropriately qualifying the same. That both sales and purchases are increased.
So, but that difference will remain between if I have to reconcile my GST records. So, how will I?
To the GST records, the reconciliations are always done.
Okay, so usme we can show it separately. It's only an account of stock transfer, and rest is the turnover.
Yeah,
true. Okay, a company has an immovable property which was given on rent, and it has been classified as fixed asset, and no depreciation is charged as income tax does not allow it. So, is this correct?
No, Aastha, this is not correct.
Okay.
If I am having an immovable property which is rented out, then it is not my fixed asset, as well property, plant and equipment.
Right, PPE.
It is my investment property. I have to classify it as investment property.
Okay.
So any immovable property which is for the purpose, kept for the purpose of appreciation or for the purpose of leasing out, that has to be my investment property.
Right.
For capitalizing anything as PPE, it has to be used for the purpose of business. My accounting understood. So here I have to keep it as my investment property, and though the depreciation is not allowed under income tax act, but under in my books of accounts, I have to depreciate even on my investment property in the books of accounts. And in computation, you have to add back the depreciation.
Disallowance.
So there would be no difference under the income tax act, because that will not become a depreciable assets as per income tax. But my financial statement, to be true and fair, I have to classify that as investment property and charge depreciation on the depreciable portion of the immovable property.
So I think this question basically highlights the fine line difference between an asset to be classified as PPE or investment. So this has to be kept in mind.
Yes.
Okay. Next question. A company purchased a flat in commercial building for rupees 5 crores for business purposes. Now depreciation is allowed or not?
Yeah, if you are using for business, the depreciation allowable. However, I've purchased a flat for 5 crores, which includes my land portion.
Right.
and land is
Oh.
not depreciable.
Right. So I'll have to segregate.
So I have to segregate the land value and the building value.
Okay.
And on the building value, I'll have to depreciate.
Okay.
I'll get the depreciation as per income tax act also.
And also as per the,
I cannot charge depreciation on whole 5 crores. That would be not true and correct.
So land and building has to be segregated.
Segregate even in the flat portion.
Correct. Okay. Moving on. Let's say I have 20 employees in my organization and it is my second year of operations. And I have not provided for gratuity because the condition regarding 5 years has not been completed. So is this correct approach?
No, Aastha, again, no. If I am following an accrual basis of accounting, it is not about that the gratuity would be payable after 5 years of completion of services. But because I am rendering, because it is accrual basis, so I am rendering my services in this year.
Right.
So for this year also, I have to provide for the gratuity from the first year onwards.
Oh, okay. So as soon as the employee joins. The liability has to be booked.
If there are long-term employee benefits of gratuity leave encashment, you need not wait. You cannot wait for 5 years. From first year onwards, you have to start providing for the gratuity.
Okay.
Provision for reflecting true and fair view.
I think this is where the prudence comes into picture, no?
Yeah.
That even if maybe as per the Payment of Gratuity Act, it may not be applicable, but I have to account this because I don't get the liability at once.
Because today he is rendering services, I'll have to pay after 5
years.
So this year's expense is that.
Okay.
Income tax allowability, non-allowability is totally different.
It's a different game.
That we can adjust through computation.
I think what happens in non-corporates is that people always see from income tax perspective. They don't look at the accounting standards perspective also. That can be different.
Aastha, here, not only non-corporates, even in the companies.
Okay.
First year company, whatever it may be, company, non-company, everyone should provide for this gratuity.
True. Okay. Now, continuing with gratuity only. Gratuity is allowable on payment basis under income tax, and I state that in my accounting policy too. So, can I account it on payment basis?
No.
Okay.
Because I am following the accrual basis of accounting. So, just merely stating in my financial statements, notes to the accounts, accounting policy, that I'll provide on payment basis will not make my policy correct. If in case the preparer of the financial statements is providing that they will be making on the payment basis, then the auditor need to qualify that in their auditor's report. In their auditor's report, that the profit is overstated as the gratuity provision has not been made.
Oh, yeah. So it has to be an accrual basis.
Accrual basis, so not on payment basis. Yeah.
Okay. Now let's move on further. My next question is regarding cash flow statement. Is preparation of cash flow statement mandatory for non-corporates? If yes, what are the threshold limits so that we as auditors can check its compliance?
A very important question, Aastha. Now, this cash flow statement AS3 is mandatory in the case of non-corporates to level 1, which actually, if I talk about from this financial year, that is financial year 24-25, the applicability of accounting standards has been changed.
Okay.
Instead of level 1, 2, 3, 4, that is level 1 above 250 crores, level 2 up to 50 crores, I'm talking about turnover, and then borrowing limits are there. The level 3 from 10 to 50 crores and level 4 less than 10 crores, it has changed.
Okay.
It has changed. So now from this financial year, that is financial year 24-25 onwards, there would be only 2 levels. The first level, which we say SMC, which will be less than 250 crores. Small and medium enterprises, SMEs, less than 250 crores, and other would be other than SMEs, which will be above 250 crores. 250. So to above 250 crores, cash flow is mandatory even for 250 crore turnover or 50 crore borrowing. Cash flow is mandatory for even in the case of proprietorship, partnership, LLP, society, trust. From this financial year. Previous year, if I talk about, it was still applicable to 250 crores.
Okay. So I think very important change, especially for financial year 24-25 onwards.
The levels.
Yeah, the levels have to be kept in mind so that we can check the compliance of accounting standard 3. Next, is the disclosure regarding related parties applicable to non-corporates?
Yes, Aastha, again, very important point. This related party for non-corporates, proprietorship, partnership is not merely section 48 2B of the Income Tax
Right,
Act.
as per tax audit report.
It is not that, it is my accounting standard 18 related party
True,
transactions.
true.
And the related parties are different. As per 48 2B, there
Okay.
may be few similarities, but certain differences. So as per AS 18, I have to disclose in my accounting, my notes to accounts, my transactions with the related party. Not only my payments, but my receipts also, sale, purchase, fixed assets, everything, and their closing balances, which is required. Current year, previous year figures, both are required. But the applicability in this new regime from 24-25 and even the earlier years was that disclosure is required for all entities, proprietorship, partnership, LLPs, whose turnover is 50 crores and above,
Okay.
or borrowing 10 crores and above.
Okay.
So below that, the disclosure is not required. But above them, that related party disclosure is also required for proprietorship, partnership, LLPs in their notes to accounts, the financial statements.
Okay.
So that is also required, mandatory.
So with this, we come to the end of our discussion. Thank you so much for your insights. I hope it will be helpful for all us practitioners, and I think for non-practitioners also, and other entities on whom accounting standard is applicable. Thank you.
Thank you very much, Aastha. Thank you. Namaste. Thanks for watching.